One of the things that comes up with this topic is a charitable remainder trust. What is a charitable remainder trust, and how can you help the National MS Society by doing one?
Let me start with sort of to use as a segue into that, tell you about a charitable gift annuity, because a charitable gift annuity, a CGA, is a phenomenal tool for people with lower wealth. And then I'll tell you about the charitable remainder trust, which is, let's call it a fancier version of the charitable gift annuity. Let's say that you yourself are living with MS, and it will be very helpful to you to know that you have an assured cash flow, and you really want to do something to help the National MS Society in its research efforts to find a cure for MS. You may not feel comfortable today donating outright a big chunk of money to the society because you're concerned you'll need those earnings from that money for the rest of your life to support you. You could buy what's called a charitable gift annuity, which will give you an annuity, a payment every quarter, every month, depending on the size of it, or every year, depending on, again, how much money you put into the annuity. And at the end of your life expectancy, at the end of your actual life, the money that's left will go to the National MS Society. So it's a great way to get a current income tax deduction. It's very simple to do. You can then get a periodic payment for the rest of your life. And you know throughout this process that you've done something great to help an organization that's helping fight the very disease you're dealing with. So that's a charitable gift annuity. It's simple, it's easy, and in the right circumstances, it should be part of an overall financial plan. It's a great thing for you as well. For a charitable remainder trust, it's more sophisticated and costly and will typically only be done if there's much more money involved, because for a charitable remainder trust, it's the same concept as a charitable gift annuity. You put a chunk of money, but this time instead of into an annuity through the charity, it's into a special trust called a charitable remainder trust. It's a charitable trust because at the end, the remainder goes to charity. That's why it's called charitable remainder trust. So you create this actual trust document. Now, the beauty of a charitable remainder trust is because it's much more flexible than a charitable gift annuity, you can actually get more of the proceeds paid out to you during your life, should you need it. And it can provide some really fabulous income tax planning opportunities. So if you have a piece of rental real estate and you're going to sell it and make a big capital gain, and you're going to pay now, after the 2012 Tax Act, a much higher capital gains tax, or even securities, you can put those into a charitable remainder trust. The trust sells them and there's no immediate tax. You get an annuity payment for life, just like with the gift annuity. And on your death, the charity, the National MS Society, will get the benefit of whatever dollars remain. So very powerful charitable planning tools, great income tax benefits for you, and with the much higher income tax brackets we now all face from the 2012 Tax Act, it's an even more powerful tool. And hopefully, as the economy continues to rebound, the amount and the value of appreciated assets that people have that are prospective donors will increase, and these tools will be a great opportunity for you.